again, everyone. Welcome back to the Daily Gold Podcast. Today we have a special guest. We're speaking with Bob Dinning. He's the CEO of Meadow Gold, which owns the Atlanta mine property in Nevada, which was a past-producing mine from 1975 to 1985. Bob, how are you doing today?
I'm great. It's nice to be with you.
Yeah, I'm glad to have you on. You know, last year you guys discovered a gold porphyry, which itself is a different structure from the Atlanta mine itself, which is what you originally acquired. Can you explain the discovery of the porphyry and what it means?
When we acquired the property in early 2011, we were aware from Kinross reports that there was about 500,000 ounces of gold on the property. And one of the first things we did after acquiring the property was to start reviewing old databases prepared by both Goldfields and Kinross, who had worked on the property during the 1990s. And our people discovered what's called a mag low, which is an indicator. It's used by people in this business for identifying pyrites, etc. And we followed up this mag low by going out and drilling a hole last June. And when we drilled down into it, we discovered that we had intercepted what's known as intrusive porphyry. So we subsequently drilled a total of 13 holes in this porphyry to get some identification of it. So for the whole season, we drilled a total of 39 holes, and 13 were in the area that we've identified as the porphyry. So the porphyry was a brand new experience for us because we had no prior knowledge of it. So in tabulating the results of the 13 holes, we've come up with some initial dimensions, and it's about 450 feet below the surface. The porphyry is at the moment it shows about 300 meters wide and 400 meters north-south, and with a 75-meter thickness. Now, when I say 400 meters north-south, it is open to the north, so we're not sure entirely how big it ultimately is. We will finish doing, when we recommence our drilling, we'll drill further to the north to find out how much further it goes. So at the moment, the indicators are that this porphyry could contain approximately 1 million ounces of gold. And we think it could be more than that, but at the moment, based on the results we have, that's where we're comfortable. So going beyond the porphyry, we expanded drilling in the Atlanta shear zone, which I can address as a separate issue, but I think your question mainly addressed how we came about the porphyry. We also have indications on the property that there may be another one about a mile to the north. So again, I can address those further if you wish.
Well, next I'd like to get into, I mean, you answered part of my next question, which is essentially the porphyry itself looks like it can be bigger than the original Atlanta mine fault zone. Maybe you could just verify that. And secondly,
that's correct.
Secondly, what are the grades on the porphyry and some of the drill results you've seen there? Aren't they better grades?
Well, the indicators, the uniqueness of this porphyry is that there are no other base metals in the porphyry. This porphyry is it's gold only with a bit of silver trace in it as well. Now, this is the first time in Nevada that anybody has discovered this type of a porphyry, because other porphyries in Nevada are moly-based or copper-based, but not pure gold. And so this is quite unique in this case. The grades on this thing to date have been running between 1.5 grams and 1.25 grams and 1.5 grams. Now, that is slightly lower than the grades that we're getting in the Atlanta fault zone, but this is deemed to be relatively easy mining material. And this whole process is all open pittable. Our people are quite comfortable in that area, so they think these grades are excellent. Now, we've had some readings in the porphyry, a couple of our drill holes. One was almost 4 grams to the ton, and we've had another one that's right around 3 grams to the ton. So We're not sure ultimately where the final average is, but it could be higher than the million or the 1.5 grams that we're presently using as our average.
Okay, next, let's just discuss what exactly are the company's plans for the rest of the year.
Well, what we have to do is we did about 30,000 feet of drilling last summer, and some of the spacings were about 450 feet apart. So this year we plan to drill at least 50,000 feet, and part of that drilling will be what we call infill drilling, because we got to get down to at least 100-foot spacings. We're also going to do some step-out drilling to the north, because firstly, the Atlanta zone clearly runs to the north, and we want to continue following it. And we think that there's another 10,000 feet of area there that we want to explore in the coming year. We've also got another mag low indicator about a mile north of the existing pit. And that mag low could be the sign of a second porphyry. Now, we're going to have to go and drill it to verify that, but that's on our agenda for this summer. So that's where the focus is. We have a significant block of land to the west as well, which we're going to do an IP survey on, and we're going to try and see if there's any indicators that could be a possible third porphyry. We don't know that for sure yet, but there are encouraging signs at the moment which we have to follow up on. So we'll be quite busy this summer just drilling primarily to the north and doing infill drilling on the areas that we've already covered.
Okay, now, Bob, before we close, is there anything else you'd like to mention?
Well, we're quite happy with the progress we've made in the company since we acquired the property. We acquired an asset that the indicators were historically it had 500,000 ounces. We're in the process of doing a 43-101 to verify the historical resource base that was accumulated by Kinross. We're also doing a 43-101 on all our drill results up to the end of 2011. That should be available, I think, sometime late May or sometime in June. The historical estimate, 43-101, should be available, I think, in the next 2 to 3 weeks. And we're quite comfortable with those results. We think that we now have roughly 2 million ounces between the Atlanta fault zone and the porphyry. And we feel that in the last year we've acquired an additional 1.5 million ounces at a cost of roughly $4 an ounce. So we feel quite proud of the fact that we've been able to add to our potential inventory at that cheap a price. From a risk point of view, our stock right now, we have a market cap of about $50 million, and that reverts to about $25 an ounce of gold in the ground. Now that's quite low. If you talk to any of the institutions, they say in a risk-free environment like Nevada, anywhere from $100 to $250 an ounce is the going rate for valuations. So we think we're significantly undervalued at the present time. But then the general market is a little bit soft at the moment, so I guess we're the victims of some of that malaise.
Well, Bob, I want to thank you for joining me and your time today. I really appreciate it. I know my subscribers and my listeners also appreciate it, and we look forward to speaking with you again in the next couple months and getting another update on Meadow Bay Gold.
No, that's great. I appreciate being here.
Okay, thank you, Bob.
Thank you. Okay.